This is a really big problem. I'm talking negative 20% in one day bad or Black Friday. These last couple of days that we had, it might be nothing. And we have to talk about this first. The world's $100 trillion debt bomb keeps ticking and ticking. Wow. And this goes back to October. So it didn't really matter who was going to be president. This was likely going to happen. But now with 52-week lows and bear market in sight, we have to really ask ourselves, is this the bigger problem? Well, I think everyone knows the stocks are going down now. But what could actually cause a Black Monday? That's what I want to walk you through this weekend. So, Jim Cramer says that, right, it's going to be 1987. Is there going to be an orange swan? Well, he says he feels like a sucker. So, does that inverse Cramer still work? Because, man, it's been reliable. And BlackRock, Larry Fink, yes, well, he seems correct. People seem more anxious about the economy than in any time in recent history. And everyone's kind of buckling up for an ugly Monday. That's right. Sell first, ask questions later. So why is this one so important? Well, first of all, it's $100 trillion problem. That's right, $100 trillion. That's like a lot bigger than everything else. The stock market's like 20, 25 trillion. Look at this number. It keeps ticking and ticking. We'll see if Doge or Doggy can do anything. But people are saying that this might not get better. Tesla's price target's been cut by 43%, citing, again, you can read it there, the president and Musk himself getting very political. And as a result, something unthinkable is happening to the dollar. It's very unusual and telling. The dollar in an environment where it should be acting like a safe haven is not. So look, like it's getting pretty bad out there. And the euro is emerging as a potential winner from these trade shocks. So yeah, like people are really anxious and worried right now. And like, look, like Ether's down by another 10%. So my goal is not to scare you, but hey, let's have a joke here. So look up in the sky. It's a tweet. It's a plane. No, it's tariff, man. Yeah, the bull market's dead. The bear is right around the corner. We go down 2-3% more, and we're gonna be there. So this does not look like a juice detox. No, sir. This is no juice detox. This looks like elective open heart surgery. Hope the patient feels as good as this one here. Why? Well, because Besant is defiant and he rejects a U.S. recession. Cool. Well, I don't want a confident man. I want a competent man. And this guy's competent. He knows what he's doing. And we'll talk about maybe that's the reason why he actually might want to quit his job and go to the Fed. Yes, we need competence here, not confidence. Why? This isn't a poker game. We're not trying to bluff here. Look, like we're negative 2.8. We're already halfway to a recession. It's a coin toss now. It's a yes or a no. So if it's just a yes or a no, like how can we make it really simple? Because only 3 minutes into the video, you're like, whoa, well, like this is pretty sobering. Yes, this is what I would like for you to focus on before the market open on Monday. Why before market open on Monday? Well, because we're obviously going to regret both. But when at least me, I'm getting quotes so the market is open, I am more likely to make an emotional decision than a rational one. So we want to try to be like Bruce Lee, and man, this is hard, right? Be formless, shapeless, be like water. It's a great quote. But here's the plan for the day to not waste more of your time. April 7th, bearish until proven otherwise. We need to fix the one-day chart first before we look at higher time frames. We're going to go look at charts later in the show, but let me see if I can show it for you here. So you're like, well, the S&P is due for a bounce. Yeah, it might be due for a bounce. Look, we're looking for we're looking for higher lows, not even higher highs. Why? Because these charts are effing wrecked, right? They're so wrecked. Let me just make sure I don't lose any lines here. Here we go. So this is Ethereum. Yeah, okay, it's going to rally. Yeah, well, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Man, that happened fast. Yes, and that's not even the top. Okay, so what are you telling me? I'm telling you to like be careful. Why? Well, look at the size of those candles. They are fat. They are red. They are angry. This is a bear market. And we have a gap down here at 441. We might get a breather here just because your time is valuable. I'll show you this one chart. This is what I'm going to be watching as probably the most important chart this week. It's QQQ back down to its previous high here, 408.71. Why? Well, if chips lead tech and tech lead SPY and tech is leading to the downside, losing the 100% retracement or the previous all-time high, could S&P follow? Well, it could probably run a test, and 480 would get us into bear territory, right? That would be a 20+% decline. And then we got to see whether this high holds. Why? Man, we're not even trying to bounce. We're due for a bounce, but hey, remember, The only thing that's for sure is that nothing is for sure. If this is once in 100 years, you might not have seen it. Might be once in 2, 3, or once in a lifetime. Also, the market can remain irrational longer than you can remain solvent. So you're like, well, this doesn't make sense. It shouldn't be happening. Yes, that's just because you've never seen this before. I'm trying to do this for myself as well. The only time I'm going to ask you for a favor in this whole video is to please consider smashing that thumbs up or subscribing to the channel. I would really, really appreciate that. And again, one more time, here are those notes and plan for Monday. So what's our goal? Well, again, we have to form at least some higher lows. I'm only talking about defense here, not even offense. To stabilize, I'm not talking about going up, which will happen no sooner than Tuesday at 4 p.m. So please be patient. So now that the bears are in full control, what do the bulls want to see? Well, ideally, they want to see the higher lows, which is less likely, or a failed breakdown. A failed breakdown is very simple. Let me show it to you here. So if we go to a one-day chart, let's delete everything. It means that we go down, but then we fail to hold it. Okay. So we have to close green on the day as of right now. We closed basically at the low. Yes. And if now I go all the way back here to Black Monday, look, there's a failed breakdown right there. So we go lower, but fail to hold it. It actually closes green. So until at least this happens, or we go back down to our plan here, we form those higher lows. It's either going to be Tuesday at 4 o'clock or Wednesday at 4 o'clock. Why? Because the first law of motion is that an object in motion is going to stay in motion until there is an equal and offsetting balance. What is that? We have to go up, right? We have to stop going down. Circuit breakers might hit. So at the top, I said -20. So now we do have circuit breakers, but it doesn't mean we can't go down by 20. It just means that we're going to get pauses as we go down. Cool. There we go. So that is the most valuable stuff for now. So if you have no more time, I think you're covered. But now I'm going to go through and give you a game plan and supporting evidence here. So on the week, it's red. There's a couple pockets of green, but oh boy, it's things out there. Even Warren Buffett is getting hit here. Still up 8%, but it's tough. So let me see what else I had here. I think this time, I think the difference between 1987 and now is that circuit breakers could slow us down. I'm going to write it up for my investing club. Peace. All right. There's also $29 trillion in emerging market debt that's piling up. And there's some key charts here that tell us that Goldman Sachs is predicting that the easy gains might be over, right? They're predicting the end of an era, right? An era of weak stock returns are ahead. When was this? Oh, October 2024, even before what we did here. So oopsie daisy. Are we going to go into a bear or a bull? Well, I think it depends on whether or not we're bluffing here. Because if we ask ChatGPT, again, just read the question here. Trump thrives on brinkmanship, but it also means he can overplay his hand or what? Or bluff. And then there's other parts in here that I do want to ask it. Why? Well, because it actually gave me a pretty good game plan. So you're like, well, how else could it be Black Friday? Let's just read here. He's comfortable with financial chaos. Look, like, I know this hurts people's feelings, but this is the truth. Between 1991 and 2009, an 18-year period, he went bankrupt 6 times. His businesses went bankrupt, sorry. And I asked ChatGPT, would this hurt or help him when compared to the question I asked at the top? Who's going to win if Trump is using Art of the Deal and G is doing what is it here? Sun Tzu, Art of War, sorry. So with this, who's going to benefit more from this here? Well, we go through what could help and what could hurt. So how could this help him? Comfort with financial chaos. Have you seen what's happening out there? Have you seen? Have you looked anywhere? Yeah, it's like pretty bad. Yep. He can negotiate under pressure. So he may see economic turmoil like a trade war, stock market crash, currency war is just another negotiation tactic. Let me make this actionable for you. Why? Well, think about this. There's a feedback loop that happened. So crypto was stable until it wasn't. Right now, washed out. So this is going to lead to a negative feedback loop over into the futures. But here's what's important. The Asian markets will open first, and they will trade in the cash market. To not overcomplicate it, Asia opens because, again, that's where it's Sunday night and Monday morning first. Then it goes to Europe. Then it goes back to America. So by the time that the U.S. opens at 9:30 on Monday morning, we're already going to have that feedback loop. There is lots of news, but now we're going to look at the reaction to the news. Why? We don't make money based on what we think or what we feel. We make money based on where we can buy and sell. and whether or not we understand what's happening here, like a death cross inside of what? A bear market, lagging momentum in a bear market with elevated volume. Yep. I would call that bearish with evidence. All right. And we have all the key takeaways for this week as well. I'm trying to be mindful of time, but I'll try to get through all of this. Pause the video if you want to see those. Or again, just subscribe because I will update you on all of this for the week ahead and going forward. All right. So what could happen this week to actually stabilize it or to make it worse? Well, the battered bond market starts 2025 facing some difficult issues about debt. What? Nearly $3 trillion is expected to mature this year, and there's a $2 trillion budget deficit we need to fund. That's $5 trillion. Whoa. So who's going to pay for it? Well, not the peasants. All right. Well, again, nice job there, JD. Right. Besant's calling them slave labor. He's calling them peasants. Man, what are you guys doing? Use your words. Leaders lead with what? I don't even want to say it, right? Leaders lead by example, right? Bosses dictate. I don't want bosses. I want a leader. That's what the world wants. Resilience and media spin. Trump is skilled at turning losses into personal wins. If an economic confrontation goes badly, he can reframe it as part of his strategy. Oh, yeah, that's right. We're doing this for Main Street. That's what everyone out there was chirping, even Besant. Yeah, well, Wall Street is owned by the top 88%, right? And the bottom whatever. We got to get those bills down. That's right. Let's make everything worthless. If this were a poker game, Trump is going all in bluffs, and G is going to grind it out for consistent small wins. So I've showed this before, but like even I have been surprised. So I had the game plan. I saw what was happening. I still got surprised. Why? Man, what I thought would be chaotic. Again, let's go back to the quote here, right? He's an agent of chaos. He has this reality distortion field like Steve Jobs, and he's comfortable with this. He's out there on the golf course shooting away. He's like, yeah, no problem. Let's go play some golf. I'm like, man, I'm not playing golf. Why? I'm not comfortable with chaos. I guess the way to think about this is what I would deem to be financial chaos might be on a different magnitude than what he does. Why? Again, 18 years. He was comfortable for this for 18 years. Wow, 18 years. Yes. 18 years, 6 times, once every 3 years. He's like, okay, well, right, can't get over that one. He had kids, right? Man, what happened to me? Man, I lose my hair when I'm stressed out. Maybe it happened to him too. Maybe not. I don't know. Maybe it's real. Maybe it's not. Doesn't matter. People are extremely fearful. So you're supposed to buy extreme fear, but oh boy, they bought it last week and now it washed out. Oof. Yeah, this time might be different. So yeah, this is not a juice cleanse, right? This is a little bit painful. So now let's jump to what actually happens this week because banks kick off earnings on Friday. But before that happens, there could be a mixture of good and bad. First thing, talked about the feedback loop. So the US does not actually have economic data until Wednesday, but there's a 10-year auction and FOMC meeting minutes here. And then potentially a hotter CPI, but a lower year over year, mixed. And then CPI in a month over month, down. Okay. And then PPI coming in hot. What does all this mean? Well, the 10-year auction, that's what matters. Why? Man, we got $5 trillion to sell just this year. 3 plus 2, quick math tells you that's 5. And we're currently inside of a Fed cycle. And Powell says he intends to serve his term out. I think he's the most most competent guy for the job, not the most confident. And he goes all the way back to here, right? He had that guy, took it down. He had this one. We'll see what happens. So what are you telling me? Well, maybe he's not going to keep his job, right? Who's this guy right here? Oh, that's right. He should want this guy across from him. That's because he was willing to hear what he didn't want to hear. What? The truth, right? A true fact. Man, it was hard. It was. So Jerome Powell says he intends to serve the remainder of his term, says Trump's pick Besant. When was this? December 10th. Okay, well, then he got confirmed. And not that much later, now he's like, oh my God, what did I do here? Or he wants to quit his job. He's freaking out. Top Trump official so freaked out he wants to quit. My sources say that Scott Besant is kind of the odd man out here in the inner circle. Some have said to me he's looking for an exit door to try to get into the Fed. Why? He's hurting his own credibility in history in the markets. Why? This is literally historic. Everyone's going to remember Trump now. So what was this? Well, Black Monday, whatever, fastest crash, we're in bear market. Man, I don't know what history is going to talk about. I don't know who's going to win. I live in the reality of today, right? I take it one day at a time. And right now, this is effing bad. So reel it all back to the beginning of the video and give me some action here. Why? Euro emerges as an unlikely winner. Why? Because Europeans are like Canadians, right? They're soft, they're docile, right? You punch them, they don't care. Punch them 5 times, they don't do anything. Well, that's what happened. Now we're like, okay, well, time to fight back. Why? Well, again, even if there's a 1% chance that what he's saying is going to happen and he reels it all back, we have to work under the assumption he's not. We have to take him seriously and literally. Talked about that extensively recently. GDP is bad. Could get worse. And there's tons of headlines we can try to get through here. So, like, honestly, there's just so many. There's so much news to go through. So everyone has their own opinion. There's all the supporting evidence. What I want to look for is this here now. So Canada has now said they're going to apply maximum pressure. Let me just pick out the stories that are relevant here. Lots more on a massive historical stagflation shock. There you go. Trump's tariff trickle route in almost every corner of the market. Nice. But hey, look over here. I got a $5 million Trump card. What is it? Well, Willy Wonka says if you can come down to the factory, if you get a nice little ticket here, nice little piece of paper. What the F is going on here? They hit back. Utilities had a safe haven. They're going to impose 34% starting on Monday. Sorry, on the 10th. And there's specific exports and whatever here. So look at what the normal bull says, right? Biggest policy mistake in 95 years. Whoa. He's like, yeah, the worst is yet to come. The guy who called it, who foresaw this. Like who? Like me. Stock sell-off is not a surprise. Okay, cool. Trump's spinning it like I told you. He's like, yeah, well, at first he said it's going to go boom, right? And then it's boom, boom, boom. And he's like, oh, well, I wanted that to happen. So over here, again, they're urging people not to invest in America. We got to go, right? Merci, Monsieur Macron. And here we go, right? Retaliation. What I want to look for is the European Union specifically. How could the euro be winning? Man, there's just so much news. There's so much here. Stock's worst meltdown since the C word. And the odds are getting even worse here. Plenty of room for recession if it's inevitable. Buffett says he was lying about him. Don't misquote me. Don't you talk to him. All right, moving down here. All right, oh man, still trying to get through it. Dan Ives, it's the European Union and Mercosur. So they went over to Asia, and now they're trying to tie in Mexico and Canada. Ray Dalio says that a push for a yuan deal might be what's going to solve it, but it was actually China. Let me see if I can find that really fast. I'm going to pause the video. All right, so again, we have to listen to both sides of the story here, and this is from CNBC. So not my favorite publication, but I trust them anyway. TikTok deal put on hold after China indicated it would reject the deal over what? Over tariffs. They said no. You need to move first. You need to blink. We know you're bluffing. That's the way I read it. I don't know if I'm right, but that's what it says. All right, let's go back here. Where was I? Oh, yeah, I was right here. No, I'll come back to that one. So that's what he's saying. It's like, no, we caved for you in 2018, and that's what they're posturing with. I'm not going to tell you who's right or wrong, but for the rest of the world, they like that one more. There you go, halted by them. I'm trying to find this stupid stuff here for Europe and Mexico and Canada. Here we go. Canada minister wants to double LNG, and we're looking for an export terminal. Where? Man, we got a huge-ass country, in case you didn't know. Yeah, huge. All right, what else? Look at this big, beautiful barrier document here. Cool. Well, we're not going to sell you Jaguars or Land Rovers anymore. And Mercedes-Benz, the best or nothing. Well, maybe now it's going to be nothing. This guy's coming to meet this week. Who cares? I don't. BYD versus, what I mean is that there's so much other news that's so important that I don't want to jump down that rabbit hole and get down there. Why? Well, there's just a lot there. Can BYD alleviate range anxiety and leave Tesla in the dust? I'll leave that up to you to decide. But the dragon is coming. All right. China pledges resolute measures to hit back at Trump tariffs. And Musk's like, wait, I got a question. I'm the richest guy. I know exactly what people want. You want a free trade zone? No. They're like, nope, we're going to retaliate on $28 billion. Sorry, Elon, you fired. And Trump signed these things, but here's the actual tariffs, right? They said it's 90, it's actually 5. They said it's 64, it's actually 1.7. All the countries that know it's misquoted, they're like, hey, how about we work together? How about we have a united stance here? Why? Because this math doesn't math. That's right, pound a kiss. This maths. So never let a good opportunity go to waste. And might have missed it, but Microsoft actually had a pretty good launch right now. It's like the equivalent of what we're looking from Siri from Apple. Here's a reciprocal tariffs, your biggest single day losers. And right, there's give me credit. That's what everyone wants right now. That is why this 10-year auction is so particularly important. Most importantly, because the guy who would be wanting his gerb, right, either at the end of May in 2026 or earlier, right? Maybe he gets fired, right? Well, Waller, who was the potential Fed chair, won't welcome Trump input. So this guy, he's not a yes man. So are we going to see more of the same? Are there still actually three executive branches, or is Trump in charge of everything? Scott Bessent wasn't so sure in the interview with Tucker Carlson. So what's a failed bond auction? It means it's really bad. So with those auctions happening this week, again, specifically on Wednesday, we got the 10-year and a 30-year on Thursday. What's going to happen? Yeah, just pay attention. Finally, we got some levels here, but let me get back to that news here because it's really important. Here's what happened so far. So if we're still watching and wondering how things could get worse, well, not everyone finds out about stock market news at the same time. There's the people who are very financially aware, somewhat financially aware, and then not aware. So news trickles down, right? We find out first, now they find out, now they find out. The question's going to be whether people are now hearing about it and whether they think they can afford to lose more. Like what? People who are going into retirement right now, they're like, oh man, I thought I could retire. Only 2 months ago, I was like, all set. I pulled the trigger. I got my 401k. Oh, F. I guess I got to go be a Walmart greeter now or go work at McStanks. Yeah, I guess so. Here's the key dates, including that the UK could address globalization. Let's watch for that. Potential deal, 10-year auction, FOMC minutes, reciprocal tariff, CPI, banks kick off earnings, and then PPI. And then we're into the thick of earnings next week as we have an election coming up. JD Vance is in Italy. And oh boy. All right, what's the most relevant in the last few minutes here? It is a weekend video, so I'll try to make my best effort here. Looking at S&P monthly notes, if we track the QQQ, like I mentioned, then we're almost surely going to get a slam down here. So we can look at a million charts. What I want you to do is to understand a couple of charts really well. Instead of looking at all the charts, let's make sure we understand what matters most. Because just like I mentioned with news going down, well, if the S&P is weak, S&P at the top of the pyramid, ETFs in the middle, single stocks at the bottom. So the joke that I made like a couple of years ago, and I'm bringing back up now, is that it's not impossible for a stock to go up. Again, I'm calling that the Niagara Falls. So over here, you got your nice little jet boat, right? Your ski-doo, whatever. And you're like, okay, well, I can do it. And some stocks did do it this week. Look, we look at a week to date. I think United Health closed green. Yeah, man, it's a jet ski going up the Niagara Falls, but man, that's effing hard. MOH did even better. But for the most part, like just zoom in, right? Easier to go down. The path of least resistance is down. So BS rolls down here and money rolls up. So when the S&P is soft, it's like the Niagara Falls flowing bearish. So if your single stock is doing really well, man, your stock is unusual. What you want to look for is stocks acting unusual, because if they don't get dragged down with the Niagara Falls, there's more likely a chance they could snap back if the market reverses. All right, there's your quick lesson for the day. So QQQ weekly chart. If we blow this area out and close the weekly below it, that's going to act as resistance. Eventually, we're going to find some support, maybe on the 200 MA. So again, pretend one candle down to here. If we bounce back up, that's now resistance. Now we have like a really ugly head and shoulders because the right shoulder is really small, but sideways is like the new up now. Sideways is the new up. But didn't someone warn me about this? Oh, that's right. I did. I mentioned the 3-month candle where I said, look, this is either going to be a one and done, right? But look, if the megaphone gets bigger, it's a megaphone. So sideways. Oh, sideways. Okay, get my money back. Yeah, but we have inflation and there's bigger problems. Oh, 1, 2, 1, 2, 3. All right. So from where we started this quarter, again, only a few days ago, how long to get our money back? 2023 October. Yeah, like a year and a half, 2 years. Are you ready for that? No? Well, then again, it's time to make a plan. If you're still watching, this is what I want to leave you with now. We need to understand what's happening here. So the UK is trying to come ahead here. Let me show you here. Ursula went over to a EU and Central Asian meeting. And what did she say? Man, we're open for business. We want to help. Why? Well, look, a Trump tariff push, staunch critic Austria back into the Mercosur deal. What's Mercosur? Man, we know what Mercosur is. That's Latin America. And Latin America and Europe are trading. All right. So now EU is like, hey, let's launch in here with Central Asia. Yeah. And now look, could the Canadian Mercosur deal start to advance here? The EU Mercosur free trade agreement, is it time to revive talks with Canada? Well, BYD, ding, 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 maybe. I'll go through that tomorrow. So I'm not going to make the video longer now. Now look, the new EU Mexico agreement is going to get fast tracked. Huh? What is that? Hold on, wait. Let's look at. Let me open up a map here. Right, Google Maps. Wait, that's like the whole world, right? Yeah, it's like the whole world except for the U.S. So man, you might get what you want. Looking at the map here, yes, the U.S. is really big, right? And it's huge. All right, it's really bigly. But what if we go like this? Oh, okay. Well, the world's like a pretty big place. So what if this whole area here was now trading with Europe? Okay. What if this whole area here is trading with Europe? Okay. What if this area trades with Europe? Okay. Who just went to Africa after Trump said we don't want to help anymore? That's right, Europe. And then there's all of Europe, and then there's the enemy, and then the dragon. Okay, and then friendly too. Okay, so the U.S. wants to isolate. You guys got it. You got your wish. Time to sleep in the bed now. Oh, what does that mean? Fired. That's what it means. The rest of the world's like, man, we're tired of this. These things are getting fast tracked. Why? Did you see what's happening here? Look, I don't know a lot about Austria, but apparently they're like, no Mercosur deal with us. And they're like, oh, please, let us in. So that's why the euro is emerging as an unlikely winner. Why? It's an inflicted wound from the U.S. And now there's inflationary shocks and all this other stuff. So the Senate passed the bill for $1 trillion tax breaks and spending cuts, but this was the cost. So what's going to happen now? What do you do with the money as the tariff market gets shaken up? Let's make a plan now. Let's close this one out. We got our charts to come back later too if there's time. 27 minutes. All right. If we're going to get relief again, maybe on Monday, I would have to assume that maybe he is willing to tolerate more pain. Why? Because of this. It seems very accurate. How could it hurt him though? Now we know what he thinks is helping him and what he's comfortable with. How could it hurt him? Short-term thinking. His bankruptcy's history suggests he wants to focus on quick deals, where Xi wants to do for decades, not just one election cycle. Reputation over leverage. Trump failures were due to excessive debt and overexpansion, which is the same thing the U.S. as a nation is in right now. So yes, everyone wants there to be some spending cuts, but man, taking the chainsaw for open heart surgery, man, like that's not the same thing as a juice detox, is it? Nope. Xi controls more variables. Trump is trying to get there. He's fired people before, and we'll see what he does next. So this were a poker game, like, man, he might win for a while, right? High stakes bluff. Xi's going for small, consistent wins. So I've been asked it, like, when could he start winning? Who can make a most critical error? You can probably guess who. Mid to late 2026. Could happen in short-term disruptions for the U.S. all the way until the end of the year. And then adjustments for mid 2026 onward. What is that? Again, a year and a half. What do the quarterly charts suggest? A year and a half. I don't want that to be the case. I would love for us to go back to where we were, I don't know, like you call it 2 months ago, 2 years ago, 20 years ago, whatever. I don't care. This is not winning. This does not feel good. So I want to leave you with a couple more quick things here. So remember, the market can remain irrational longer than you can remain solvent. So just because we're due for a bounce does not mean it's going to happen. History repeats itself, does not repeat itself, but it often rhymes. So we might just accelerate all the way down to the negative 30, which is what Black Friday was. Negative 35% peak to trough when it washed out. The M is here. Is there still more downside? Well, we might go into the bear. And this is where we have to be mindful of these things. 546 is what we have to get to save the quarterly chart. Or wait till the end of the quarter. That's basically 3 months. So with the 52-week low and bear market in sight, let's read these notes one more time. Why? I want to be drilled in here. Why? Let's try to be like Bruce Lee and make your plan before Monday, please, when the quotes are not happening. So for tomorrow, April 7th, bearish until proven otherwise. We need to fix the one-day chart, which means we have to wait no earlier than Tuesday at 4 p.m. If we get a failed breakdown, which is much more likely now, that resets to the earlier condition to Wednesday at 4 p.m. That's basically it. I could go through a lot more supporting evidence, but I want to encourage you to do one of two things. If you're still watching, just subscribe to the channel if you haven't already. I will walk you through most of this every weekday for free. I also stream live every day. When? 9:30 every day. Sorry, 8:30 every single morning. Or if you want to come join me for a 45-day free trial, you can do that by going to thealgo.com. We're likely going to be launching an end of the world sale tomorrow, so stay tuned for that too. All right, thanks for tuning in. I'll see you on Monday.